What does a paint company, hot pot restaurant, and football club have in common? You've guessed it correct, they are all owned by Singapore billionaires. Now today we'll be talking about top 50 richest people in Singapore. And their net worth range from $750 million all the way to whopping $16 billion. You know, these are crazy numbers that most of us can't imagine. But I guess in this whole discussion, we'll be sharing important insights into wealth building. Maybe it's important to teach the younger generation, kids, nephews, nieces, or just to inspire ourselves that everything is possible. And towards the end of this video, I'll actually have a special name that's actually excluded from this list. So if you're curious who that is, continue watching. Hi guys, welcome back. Today we'll be going through Singapore's 50 richest billionaires. This list explains, everything you need to know about who are the richest people in Singapore itself. And I'll firstly start by explaining how does Forbes actually measure wealth, because this is important. Many of you guys might be thinking these are foreign names, but there are reasons why they also made it to this Singapore list. I'll also be next sharing with you interesting findings, what you need to know from each of these billionaires. Maybe some inspiration is going to come from there. And last but not least, we'll be applying it to our own finances. So without further ado, let's start with part 1, which is understanding how Forbes actually measures wealth. In the recent video sharing, I've actually made known that Singapore's net worth has actually increased by 8.9%. Now in that video, I have seen many comments that are clearly not in agreement that we've all gone richer by 8.9%. But today, we'll be just talking about these rich folks and seeing how they measure their own wealth. This methodology doesn't require that person to be a full Singaporean, by the way. It can be foreign citizens who live or do business or have extensive connections to Singapore itself. So don't throw shade at some of the names that might be coming up. Of course, some of them are also household names that have been there for many years. Secondly, net worth in this instance is also calculated based on stock price and the exchange rate as of August 2023. Now, some of them own listed companies, which share price moves up and down, and some of them own private companies. So this Forbes measurement actually compares, those private companies with similar listed public traded companies. Last but not least, let's analyze some interesting findings, and let's start with the very first one, who actually looks very interesting, something that I've came to learn a bit more through this whole discovery process, which leads us to part 2, interesting findings, and it starts with Mr. Goh Cheng Liang. Mr. Goh is ranked number 4 richest, right now having $12.3 billion in net worth. Now you may be thinking, who is this rich old folk, correct? Not important yet. Let me show you an advertisement and you confirm know what he owns. Do you find this familiar? This is actually an advertisement that made its rounds, for the last 10-15 years. And it's actually by Nippon Paint. Nippon Paint is actually a listed company in Japan. And Mr. Goh have certain big ownership in that listed company because he heads this Southeast Asian division. Let's look at the recent results for Nippon Paint Holdings itself. You would see that profit has been steadily increasing over the last few years, and there's actually a major boost in second quarter 2023. Wow, that green bar already shows that profits are surging. Maybe there's a lot of BTOs completed in this year. Again, Singapore is not the entire base of Nippon Paint. That is something I would be expecting. But to my surprise, Nippon Paint Singapore, which is actually part of Nippon Southeast Asia Group, actually is the biggest contributor to sales to Nippon itself. Take a look at this pie chart. You see that blue shaded area, Nippon Paint Southeast Asia, is the biggest contributor. So when I mentioned that many BTOs are completed, maybe there's some truth to things. But that aside, Mr. Goh has done fantastically well in his net worth. The story is that he first set up his paint shop in Singapore more than 50 years ago. And what this shop actually did for him was to distribute Nippon Paint in Singapore, and eventually he did the sales so well until he had stock ownership of the company. That stock ownership grew over 50 years, compounded, as Nippon is a fantastic product, is widely adopted, and therefore the ownership in that shares has grown along the years. He's always featured in the top 10. Right now, he sits at number 4. And the interesting part is he's actually the oldest billionaire. Right now, at the age of 96. So 2 things to learn. The first, it's never too old to be a billionaire, correct? And number 2, never underestimate boring businesses. These days, we're all talking about AI and tech, all these fancy names, but little did we know that investing into traditional, boring businesses like paint, there's this saying always, investing is like watching paint dry. And paint business is something that's so boring boring, but always needed because we have always new buildings and new houses. Warren Buffett himself has always been investing in traditional businesses, and that is something that I'd like to share with you just to take away, because most of YouTube content always touches on hot stocks. And if you agree with this saying that investing is usually boring and that is how you actually make big monies, smash the like button, and also just to reward us for making this hard work as a team to present to you some interesting findings that we've also enjoyed doing ourselves. So let's move on to another familiar name, who is Mr. Loo Chun Yong. He's actually a doctor. He owns, you guess it, the most important private chain right now in Singapore, Raffles Medical Group. Dr. Loo actually has right now an estimated net worth of $1 billion. And Raffles Medical Group right now has solid presence in 5 different countries. They are Singapore, and in addition, Indonesia, Thailand, Vietnam, and more importantly, they are trying to break through in China. As we can hear a bit, China's economy is not doing too well, but healthcare is healthcare. Healthcare is evergreen. And if Singapore's brand name and reputation for healthcare is going to be stemmed on those hospitals over there, I think there's still going to be a competitive edge. As we can see, group revenue has been steadily increasing over the last 5 years, correct? And for me, when I track Raffles Medical, I think this breakthrough in China is fundamental for it to double or even 10x in the next 10-20 years. So I'll be keeping close tabs on it. Right now, profit after tax has jumped significantly. So if you are interested to find out a bit more on Raffles Medical, leave it in the comment section. Smash a subscribe, because when there's something that comes out for this company itself, I will be sharing on this very channel. With that, let's move on to another interesting finding, who is someone who I've covered quite a bit also on this channel, and he's none other than Mr. Chua Tian Poh, ranked number 37 on today's list. Mr. Chua is worth $1.2 billion. His story is that he was once a high school dropout, and he has actually founded Hobby Group, a property developer. Just in case you don't know what buildings they own, take a look at this. Familiar? If you have been taking East-West Line, this actually sits at Buona Vista, Metropolis to be exact. Who are in Metropolis? They are none other than Shell, and if you work in MOE HQ, this building is definitely familiar to you. But Mr. Chua has actually made his fortune being a pioneer developer in Sentosa Cove. That was a time where I was a newbie investor back in 2007, and Hobby was actually an early mover. Sentosa's development, they had a foresight that it could become something big, and they were on the forefronts of developing that whole project, and one of which is actually Seascape Residences. So Mr. Chua has held on to these properties and it served his group well, but right now Hobby is pivoting a lot to UK properties. They've recently purchased Scapel, which is a commercial building in London in 2022, for about 700 million British pounds. That equates to about $1+ billion. So this acquisition actually adds on to their list of UK commercial properties, which I personally believe in some point they should list it as a REIT itself. But right now, properties over there, the sentiment is quite poor. That's why, as you can see, Hobby's share price has dropped along the years. I do think that this is a company that over a long time is a good investment, because they have actually shown good investment foresight into what properties to own. And even though they've moved away from Singapore residents and preferred UK properties, I still believe that you'll pay off over time. Right now, Mr. Chua is passing reins to his son, Nicholas Chua, who has been appointed as CEO very recently. Let's move on to another name, which I think is not familiar to you, because for myself, it came as a surprise also. And it's actually Mr. Bini Bensel, ranked number 31st on today's list. Before I tell you how much net worth he owns, Mr. Bini Bensel is the youngest on this list. He actually founded Flipkart with just a starting capital of $7,000. That's crazy, correct? Because Flipkart is right now one of India's biggest e-commerce platform. The interesting part is that Flipkart is actually incorporated in Singapore. That's why he's actually made this list also. Now imagine Flipkart like Alibaba, and as you can guess, India's population is very big. In fact, the biggest in the world right now. So Flipkart has a lot of transactions, and therefore Walmart has actually made a substantial purchase of this company. They have actually acquired the company for 77% at $16 billion, and that was done in 2018. More interestingly, Mr. Bini Bensel has actually fully sold out his stake to Walmart in 2023. So selling his company away fully, Mr. Bini Bensel would be worth a lot of billions of dollars, correct? But the actual figure only stands at $1.45 billion. So the key lesson for this is that it's better to own a fraction of a watermelon than most of a grape. This is actually a quote that I've actually learned on Shark Tank, which is a show, and it's a quote from Mr. Mark Cuban, and it reinforces when you own a fraction of a company that is so big, it's still going to be worth billions of dollars. With that, let's move on to another interesting figure in the Singapore billionaire scene, who is Mr. Peter Lim. Mr. Peter Lim sits at number 23 on this list with $2 billion. If you're a football fan, you probably know of Valencia Football Club, correct? In La Liga, Mr. Peter Lim has actually purchased that some years back at $720 million. So you'll be thinking, where did he actually make his millions to make such a purchase, correct? No Singaporean other than him is making big moves in the European football scene. So he has actually made his monies through this company, which is Wilmar International. Mr. Peter Lim has actually invested $10 million many years ago, and Wilmar International, through his listing, has actually delivered him a 150x in terms of return. Wow, $10 million becomes $1.5 billion. That is how you actually become a billionaire. When a company you've invested with sizable amounts grows to such a big extent, and Wilmar is one of the blue chips listed right now in Singapore. As you can see, his windfall of $1.5 billion has allowed him to make acquisitions all over the place, including Valencia Football Club, and most recently, he's actually purchased Thomson Medical for $500+ million. The key lesson that I've took away from this is that don't let your cash sleep in the bank account. When Mr. Peter Lim had made his billions of dollars, he actually continued to invest, find different assets, plow that money towards there that can grow. So again, net worth is all about ownership of assets, and keep that in mind before you keep too much in the bank account. With that, let's move on to number 18 on today's list, who's someone very familiar to all of us, Mr. Forrest Lee. Mr. Forrest Lee is worth $2.4 billion, but Sea Limited, which is what he owns, shakes so much in terms of share price. I think the moment you're hearing this figure could have changed yet again. Just as backstory, Mr. Forrest Lee is the chairman and CEO of Sea Limited, and even if you don't know about Garena, you definitely know about Shopee. In Singapore, Shopee's advertisements come on YouTube, come on television and stuff, but Sea Limited is making waves not only in Singapore, but also in Latin America. The interesting part about Sea Limited is it was once the darling of the market, 10xing in 2020-2021. But right now, share price has crashed from $300+ all the way down to $45, as you can see in this chart of it. That has affected Mr. Forrest Lee's net worth. As you can see, he was once worth $12 billion, but right now only $2 billion. And this decline has been across the years consistently. Sea Limited has been struggling to make consistent profits. Recently, it's actually laid off 10% of his staff to improve on balance sheet. But Mr. Forrest Lee has also shared that the worst is possibly over, and he's actually told that openly to his staff. So for me personally, I think that is credible. Sea Limited is one of the few tech names in Singapore on this list, and again, it reinforces it's better to own a fraction of a watermelon than most of a grape. Sea Limited is a big company, and I believe that Mr. Forrest Lee will come back to top 10 on this list once sentiment on Sea Limited improves down the years. Let's move on to another name who is someone that's household to all of us, and that's none other than Mr. Wee Cho Yaw, sitting at number 8. Mr. Wee Cho Yaw is worth $7.1 billion, and he is the co-founder of UOB. I would guess that at least 30% of you watching right now have UOB as your banking account, and Mr. Wee needs no further introduction to you. The only thing that I'll highlight, he's right now at the age of 94 and the second oldest on today's list. Let's move on to someone else who's ranked higher on this list than him, and it's none other than Mr. Zhang Yong. Mr. Zhang Yong owns a very famous restaurant chain. Take a guess what it is? It's none other than Hai Di Lao. Hai Di Lao actually did an IPO many years back, raising $1 billion, but right now it's worth substantially more than that. Mr. Zhang Yong's net worth itself is $9.7 billion. And Hai Di Lao, many people assume that it's all about marketing and customer service. But from what I understand, Hai Di Lao's success can be attributed strongly to its employee welfare program. This is something mentioned in this article that credits employee welfare to driving hardworking employees that drives ultimately good customer experience and good sales down the years. So if you're also starting a business or starting a company, take note again, customer service is very important for your success. So without further ado, let's review who's number 1 on today's list, and he's none other than Mr. Eduardo Severin. Right now, he's worth $16 billion, and if you have watched this movie, The Social Network, you would realize that he was once a co-founder of Facebook, right now rebranded as Meta. The story goes like this. He was kicked out of the company by Mark Zuckerberg. There was a big legal case for years and stuff, and finally he took a settlement to exit the company and not pursue further lawsuits. Mr. Eduardo is a Brazilian native before becoming a PR in Singapore. And let's pull up the share price of Meta platforms for you to have a look at his journey in net worth. Back in 2022, he fell down to number 4 on the Forbes list simply because Meta's stock crashed. But right now, we can see a V-shaped, shocking recovery, correct, for Meta share price. And with that, he surged back up to number 1. Market right now is focusing on Meta's ability to drive earnings and is rewarding the share price, which is a big contrast to C Limited and a big contrast to this name, which I'll review in a quick while, as the most notable exclusion. Have you noticed someone prominent or some company prominent in Singapore that is not on this list? It's none other than Grab. All are familiar with Grab, correct? You have GrabPay, there's GrabFood, etc, etc. And Mr. Anthony Tan is the CEO and co-founder of Grab. Mr. Anthony Tan made it to this top 50 list back in 2021, but he's actually dropped out as of 2022. Right now in 2023, he's not back on this list. And that's because Grab's share price has continued to stay flat in the last 2 years. My personal opinion is that Grab's inability to turn profitable is really dragging on share price. And there's a big contrast to Meta, correct? A company's ability to drive profit shows that it does not rely on shareholders to inject new capital for it to continue running its operations. Hopefully, Grab can turn profitable and hopefully that can inject new life to Grab's share price. And with that, Mr. Anthony Tan can climb back up the list today. As always, let me know in the comment sections who is your favorite in today's list and whether you've learned something or not, because we're going on to part 3 of today's discussion, which is what you can apply to your own finances. What is the common theme that we can realize from all of them? Some of them, of course, were school dropouts like Mr. Zhang Yong and Mr. Chua Tianpo, owning Haidilao and Hobby respectively. But that's actually not the point. All of them own stock in listed companies. Stock ownership is owning a business, and owning a business is an asset. When you have assets and the asset price grows, you realize that your net worth will also grow. Some of them own one company, some of them have diversified after cashing out from a particular one. Again, it reinforces they are not holding on to cash in the bank, they are investing into assets and keeping that money is working harder for them all the time. You know, during my sharing of net worth, I actually saw this very interesting comment that mentioned based on the amount of money that ordinary Singaporeans will scam off, it is quite clear that many Singaporeans keep a lot of cash in the bank accounts. I think today's whole discussion reminds us, yes, indeed, share price can move up and down and it's scary to invest. That is still fundamentally important for you to grow your wealth through investments. Monies in the bank account will eventually get eaten away by inflation. It is something we talked about in 2020, 2021, but right now with bank interest rates at 3-4%, people are very interested in keeping cash again. I'd like to reinforce, stay invested and get invested. In a subsequent video, I'll be sharing with you why keeping cash is actually a terrible idea. I'd like to reinforce that topic again. So if you're curious about hearing that alternative point of view, smash the subscribe, get notified when it's released, and join me in that discussion then also. With that, I'd like to invite you to some of my previous tutorials. This touches on my net worth. Just in case you haven't seen it, check that out, and hopefully it can inspire you better in your own financial journey. With that, I'll sign off from here and see you there. Take care as always. Goodbye.